What's going on, FUD Nation? Today we have a great interview with none other than our good friend Mike McGlone over at Bloomberg. Now, this one, of course, is interesting indeed, as Mike is back, in some senses, here to face the music, as his call of going down to closer to a $1,000 Bitcoin certainly did not materialize. So today we're going to talk about Bitcoin as an asset in the future today, and really start to push and pull on different potential scenarios, including an extremely bullish Bitcoin that overtakes the market cap of gold, which would mean Bitcoin at over $300,000. Strap in, FUD Nation. We have a great interview coming right up with Mike McGlone from Bloomberg. Welcome back to the show. None other than Mike McGlone over there at Bloomberg HQ. Thank you so much for taking the time to be on FUD TV. How's everything going?
Hello, Elio. Good to see you, and thanks for having me back.
Well, it has been quite a month since you have last been on FUD TV, quite a month of bullish behavior in the market. Mike, are you eating your words right now about Bitcoin?
Oh, yes. Well, I am. I switched to my indicators switched bullish right after the Tether trouble. After the market got past, so that was a significant indication. Now, we don't have to delve too much in the past. The key thing for me was record shorts, and the minute that Bitcoin was able to sustain above 5,500, after the Tether thing, meaning it got through that systematic risk that we were all worried about, and that was a risk-on indication for me.
Now, obviously, you had said in prior broadcasts that record shorts, getting extremely short, was what you wanted to see out of the market before you could see some bullishness coming back into the market. However, almost all of your indicators, even besides record shorts, were pointing downwards. So let's walk through here, and I guess let's try to get to the bottom of the question of, does Bitcoin behave by the rules in any way here? Or, are we essentially seeing this new asset class bucking the ability to be put into any kind of conventional analysis?
The latter, I think, is more. There's always going to be conventional analysis, and just like every market, there's a learning phase. But I think what's happening to me is something we really expected this year, just thought it was going to be from lower levels, is Bitcoin becoming a digital version of gold. And it really has been. We've seen what's happened this year. It's really picked up on its market dominance. Bitcoin's kind of leading. And you see institutions are clearly getting in, and they're bucking some of the other altcoins, saying, well, there's really only one gold here, and the rest are silver or copper. And to me, that's really what's happening. And that's partly what's distorting things like NVT ratio. But hey, that's a strategy. You have to go with it. One thing I'm still very concerned about, and we've had a substantial breakup, but a lot of the key things, the key indicators are still lagging. In the past, they've led. And one of the key ones is adjusted transactions and things like that. But hey, here we are. We're close to 8,000.
Yeah, I mean, it's been absolutely, I think, even for strong believers in Bitcoin, seeing it go so fast from the low 3,000s and just rocket, slowly work its way back up above 4,000. Once it broke 4,400, that to me was my big indicator to get back anything I had on the sidelines to get it back in the game. And it's been a phenomenal decision for me. Of course, seeing it blow through the 6,400 range with such a vengeance, the mid 6,000s, I think that was something I did not expect. I expected that to be a lot more of a battle. What does that indicate to you? Seeing essentially what a lot of people were regarding as the bear market marker, that $6,500 range, seeing it get eviscerated on the first attempt and just absolutely nuked. What does it mean to you now?
Typically, when the market gaps through such a significant high volume resistance like that, it's an indication of a new bull market, which is what I published on Monday. So I walked home Friday night expecting to publish over the weekend on Monday that, here's the wall resistance, 6,500. Here's why. I can show you a chart when you get a chance, and it should hold. Walked in, and glad I didn't do that because we saw what happened over the weekend, and now that resistance is support. Now, obviously, some of this is because of consensus, what happened with Bitfinex and raising the $1 billion, but that's all part of the noise. This is a significant indication. I mean, I remember being in the trading pits in the 90s, and the bond market was blasting through a key level, and the guy next to me, who was with Chase at the time, it was before JP Morgan, he said, oh, this market's never going to stop. I pulled up my charts, which is very similar one I have right now. I can show you a little bit, and I said, it's going to stop here. And it did. And he looked at me and go, how'd you do that? And I'm like, well, it's one of those things you just remember. Markets usually go and hold very high significant volume areas. In this case, the fact it blew right through it was, as a long-term market watcher, that's pretty significant.
Well, I appreciate you acknowledging that. And I want to cycle back and talk a lot about this Bitcoin being digital gold, because, the real core Bitcoin community sees it as that reserve currency, sees it as that store of value, especially as you're talking about, I just did an interview yesterday with Roger Ver, which will, I don't know if at the time that this is released, if I'll ever release that yet. But essentially, Roger believes that Bitcoin is peer-to-peer cash. A lot of people believe that Bitcoin should be more like digital gold, not necessarily an emphasis on quick, fast transactions, but an emphasis on long-term stability, decentralization, and just a preservation of value, a place where you can stick your wealth, and not necessarily access it so easily. I believe personally it'll be both in the long term. However, going back to digital gold, what would that mean for the Bitcoin price if Bitcoin does become digital gold? Now, you've said before that that would mean that it holds the per coin value of an ounce of gold, but I'll push back on that. I think that it means that it holds the same market cap. Would you agree?
Yeah, though that I'm going to dig into a little bit more, and I appreciate that insight. I've heard it a lot. I have to do my own research on it. I'm a bit skeptical at the moment. Now, the market cap for gold is entirely different markets. We all know that. I have gold on my body. The number one source of demand for gold is still jewelry. But this is just the new world, and it's that ability to be able to move funds on the thumb drive that you've never been able to do in the past has value. Now, as far as how much value, I don't know. The significance is a lot of that value has already been priced in. The parabolic days we've had in the past are very unlikely, partly because people have bought into, but I'm still trying to go there, and I will dig into that form of big picture macro research to put a value on it. For now, I'm more shorter term. This is where I think it's going in the short term and why. And I'm looking at 10,000 as pretty solid resistance, and 6,500 is pretty solid support. Now that what was resistance is now support. Big picture, I don't know. I got to get my hands around that, get my mind around that one.
Well, we'll keep you in the comfort zone right now, and obviously, I would argue that 30 year to date, we've already seen a parabolic movement, and whether that continues or not is obviously up for debate. But obviously, whether it goes to $330,000 a coin, which would roughly equal the market cap of gold today, that's also up for debate. However, I would argue that as a store of value, and I think a lot of people would agree that it does what gold does in a much more modern, much more sensible way. Though you can't wear it and show it off, I'm sure someone will figure out a way to do that.
All right. Well, I'd like to see that.
So what do you got for us, Mike? What are you looking at? What do you think are the most important indicators to be looking here on the Bitcoin and cryptocurrency charts?
If you can see my screen, I'm showing just the first chart that I published on Monday morning when it gapped above. This is what I was showing as a significant breakout. What you see on the left is that's the distribution of volume for entire year of Bitcoin last year. That was established the bear market. And the highest volume price, basically if you look at it as a normal distribution, the apex of the normal distribution was 6,500. Mm-hmm. The fact that we blew through that is a significant sign of strength. Now, it's going to take a little time, but the more you sustain above, that means it's a complete rejection of resistance and going right through. So you just look at the next level near the upper end of distribution around 9,700. Now, that's pure technical, and then I can show you some of the things I watched. The one thing that I've really dug into since the last time we spoke is I've been looking for the highest correlated metric for Bitcoin. I find it's adjusted transactions. Now, Coinmetrics has a measure. Blockchain.com has a measure. They're both very similar as far as correlations, and to me, those are still somewhat lagging and a bit disconcerting.
Okay, so what would you say is the most concerning, and what would you paint here? Well, let me rewind a little bit. How long would you say it would take for you to confirm that we're going to stay above this support level here? Well, about what span of time would make you start to feel more comfortable?
I don't know. I mean, that's like the thing. That's the thing is a strategy. You have to go with it each day, different day, and see what the market says and does and how it reacts and adjust accordingly. For now, it's obviously quite bullish. And the key thing is, I mean, if you can see my screen now, I'm showing a chart in white, and that's of transactions. The significant part is, let's just say like the 10-day average. And what I do is I download it because Bloomberg doesn't show weekends. So I download the 10-day average and then suck it in the system so it captures the weekends. And what's this difference this time is typically transactions and that velocity of increase in transactions precedes prices. Now that's not happening. That's different this time, which is what makes me concerned. What I show you in the bottom is the 10-day average versus the 100-day average, which shows the velocity. At least you can see how it's picked up versus last year. So that's something that's really different. I don't know really, I'm seeing what's going to catch up. But I wanted to show you the reason I do this. And one of the key things I go through is on this diagram. And then I'll stop because I know sometimes I talk too much. But I show you what I'm showing you on the left-hand side is Bitcoin's correlation since 2014 to some of the key metrics. And you don't have to know what these are. I'll just point out this is the crypto compare Van Eck index. Okay, it says a 90% correlation. It should be. This is a 10. This is a crypto compare top 10 index is a 75 correlation. The significance is Bitcoin adjusted transactions. The measure I've been using, 10-day average, has a 0.72 correlation. That's higher than everything I found. Now that's a monthly basis. I just want to show you one thing and then I'll shut up. When you switch this to a quarterly measure, and this is what as a strategist I'm always looking for, what has robust measure and correlation in the past? I'm just doing this real quick. This adjusted transaction correlation to the Bitcoin price since 2014 beginning is 0.95 correlated. That is what really captured me. I'm like, okay, something's going on here that matters, and I need to keep an eye on that and watch it going forward. So far, I'm a bit worried. Of course, markets change, things change, but for now, that's a key metric I've been keeping an eye on.
Yeah, I think it is. You're bringing up a lot of really interesting points, and for everyone who's not quite understanding here, essentially what Mike is saying is that this metric of Bitcoin's adjusted transactions on a quarterly basis is almost perfectly correlated to the price. So as it goes up or goes down, the price would go up or go down rather, and that right now there's not an increase that matches this price increase. However, there is quite a possibility that Bitcoin was significantly undervalued for the last few months and is now just catching up, which would maybe indicate why that increase hasn't occurred. I'm a firm believer that price increase is the first and foremost marketing for the entire cryptocurrency industry, and that a lot of people learn about the technology after they've been exposed to the potential for price increase for essentially wealth increases. And so as the price increases, we start to see, like with the top at 20,000, a huge dramatic increase in the amount of people trying to send transactions on the Bitcoin network because they're all buying their coins and moving their coins for the very first time.
So what you said to me is very profound. It was what attracted me to your show right away. It was that's something as a commodity strategist and doing this for 30 years makes a lot of sense. And they oftentimes will say the cure for lower prices is lower prices. And same thing with this case. Oftentimes price will drive supply and demand, and this is what I'm coming to terms with. But for instance, it was earlier, way last year, you were one of the key guys pointing out, when everybody was bullish, you're pointing out, no, this market's going lower. I'm like, oh, this guy's got something going on. I had to listen to him. And so that, to me, makes a lot of sense. So price could be leading, but it's all Bitcoin in this case, most notably Bitcoin, leading the other, and I wanted to show you that, leading the other the full market. And that's what you see in this chart here. You see Bitcoin breaking above resistance, and the broader market as measured by the Bloomberg Galaxy Crypto Index, which is the top 10, lagging behind. So it's that digital gold shift in Bitcoin. It should be. It makes sense. I mean, it's the first, and it's just like the Dow Industrial Index. It's not the best index in the world, but it was first.
So I appreciate your kind words as well, and I just want to put on not a tinfoil hat, but just a reflective hat here and say, how is it possible that we get the news that Bitcoin's being accepted by so many major retailers? Fidelity's about to launch their trading desk. There's just so much news that seems to hit all at once as the price seems to skyrocket. Is it too many coincidences? Does it form a pattern? Are there major movers now saddled up behind this? Is that what it looks like? Or do you think this sort of conforms to the same old types of pumps that we were seeing back in the 2015, 2016 era for Bitcoin?
That's one thing I've always been intrigued with markets, how things will drive you crazy for a while, make you lose your hair, remain very much irrational, and then all of a sudden go the way you kind of expected it to, or the way it should, all at once, and everybody jumps on board. Obviously, that's happening now, but to me, as a strategist, you always have to be adjusting what's different. It's clearly different. And that is, this is much, I think it's obviously retail FOMO, but now to me, it's much more about the Bitcoin becoming mainstream. I.e., it's not really, I don't look at it as something I'm going to use for transactions. I would never, ever use something that's going to go up or down 50% for a transaction, but I would definitely use it for speculation. Not me, but other people would, or for storing value when I need to. Now, that's different. If you're going to, it's just people will realize that you don't want that volatility when you're just trying to pay your bills and things. But then you have things like Tether for that. So to me, this is now jumping into the realms of, we have very active futures. The futures have been very successful. One in particular, CME. We have regulation really coming into space. So it's that transition that really is going to should squash volatility. It should reduce the massive, 3, 4, 5, 100x moves we had. That should be over because there's just too many people involved now, and that's the ARB guys. I used to be a hedge fund, and believe me, we can ARB things really well. You buy this and sell that, and FOMO lasts a little while, but the smart money will get in there and ARB it out and make some money on overbought and oversold.
I do see that. Isn't in so many ways Bitcoin the asset that a lot of these Wall Street traders have been waiting for decades, in that if you are really good at catching swings, isn't there an asset, is there any asset in the world that would be more fun and more rewarding to trade than Bitcoin? Because you're just not getting those spreads on any other asset.
There you go. That's what I came to New York. I've been here since '93. I came to New York from the trading pit of Chicago, being over-the-counter options trader in U.S. Treasuries, and I salivate at what I see options market makers can be doing in the space. I'll bid here, I'll offer here, 20% spreads or so, and hedge up the delta, and you make money on the spread. You don't ever care about, you don't take directional risk, and this is a wonderful space for that. And that's what I see it as, and that's where smart money's coming in to do. That will narrow the spreads, that will reduce volatility, and at some point it should continue to arb out, all those massive moves will be taken out. But it's this, you look at this is just a wonderful space for those type of traders, where most of the rest of the world, a lot of that's been arbed out, and this is just the place to do it. And all the trading desks in the world are just trying to get in there, and just like me, be able to buy the low, sell the high, hedge your delta, and say thank you. I made money just making the markets.
Yeah, for a market maker, it seems like an absolute dream. For a very skilled trader, it seems like an absolute dream. Most importantly, I think what you're saying is part of the narrative that is Bitcoin, which is over the long term, especially as you get these parabolic upswings and even the parabolic downswings, is that you have more people come to the party, more thicker books, more regulation, and more reasons why the price stays stable, relatively stable. And so, as you fast forward 5, 10, 20 years, the price of Bitcoin really should not be taking 20, 30% moves in a day down that kind of a time horizon. You can look back at 10 years ago, and it already is significantly less volatile than it was back at the beginning of Bitcoin's cycle, especially as far as trading. And that is precisely, I think, Satoshi's vision was, over the long term, it becomes a stable coin, and it becomes a much more reliable medium of exchange. And so that's when I think things get really exciting, because you have two different buckets, right? You have the reserve currency, the gold sort of bucket, and then you have the actual functional medium of exchange currencies, the fiat currencies. And right now, those are still they're not very sound. In fact, they're the least sound by design. And so over the long term, that's why I think there's this very bullish sort of long-term narrative is once we reach that point where the spreads become small, where the volatility becomes low, where the daily swings are in the 0.5% to 1% range. Now that is precisely where we can start using it like cash. And once it gets to that point, I believe it can occupy a much bigger role even than gold's market cap, where you start looking at what is the market caps of other, fiat currencies around the world. You start getting sort of ridiculously high numbers. And if it's that trusted, if it's been working that long, if it's this uncorruptible system, as we like to believe, wouldn't it be possible for it to occupy all that market cap? And I think that's something I'm not going to call on you to confirm or deny, but that's the excitement, right? Is that once we get there, we can possibly have that. I mean, would that make sense in theory if Bitcoin becomes quite stable at, let's just say, $100,000, $300,000?
Well, I love those numbers. I think they're quite optimistic. Buying it at a few pennies and going to 20,000 is about as good as it's ever going to get for anybody in the world in history has ever done this, and you'll see that. But I think what you made is the key point, and that is what's happening. To me, that was kind of my prediction at the beginning of this year. Bitcoin's really going to make major strides becoming digital gold, means lower volatility. That's what I'm showing right now. Volatility is declining. It's picked up recently, but it needs to decline, and it will continue to decline, virtually guaranteed. But the problem is when it goes parabolic, that's really bad for volatility. It's bad from a transaction standpoint. So I do not think it's going to get anywhere near those price levels. Again, I have to dig in, but becoming more and more, it does. It also depends how you look at it. It's doing versus the dollar. So what's happening is the dollar potentially depreciating, or is Bitcoin appreciating? That's one thing I like to point out. That's one thing I've always been attracted to for gold, and Bitcoin's a part of that. For good examples, I look at my father bought a house in the 60s and maybe paid $20,000, and that house trades close to $1 million now. It's not because the house rate went up in value, it's because the price of that piece of paper went down. And yet that same house still cost maybe 200 ounces of gold, and now it's maybe 200 ounces of gold. And to me, that's what this is doing. But to be a solid currency, it might appreciate versus the dollar, and that's what I was really looking for, to see dollar weakness this year versus other currencies in Bitcoin strength. That would be okay. That's part of the macro migration, and so far we're not. I guess you could say we're seeing that, but we're getting there. Anytime you really think about parabolic moves, it hurts. It turns it much less of a currency, less of a store value, more of just a speculative digital asset.
So are you on record saying we are never going to get back to 20,000? Is that a belief?
No, I'll never say never, except I'm not saying never about that. I'm just very cautious about people who are leveraging up and playing for the big old days at these levels. I mean, the way I like to say it is, in this stage now that the masses are involved, the best days of appreciation are over. And that's just a lesson of history in virtually every market since the beginning of mankind.
And what is your feeling? How would you define the masses? Because I don't think the masses are involved, especially not your run-of-the-mill traders are still, a lot of them, they're not going on Coinbase. They're not going on Gemini Exchange. They don't have Bitcoin available to them in the ways that they have their other traditional assets. And there's still a very stigmatized approach, I feel like, to these assets. I would argue that you still don't have the quote unquote masses yet. I think we still have a very small community compared to the people who are exposed to your NASDAQs, your Dow stocks.
I can't disagree with that. I still see a pretty substantial speculative overhang that needs to be worked out, and it's done very well so far this year. But I can't disagree with that completely. So I'm still trying to come to terms. But those type of parabolic moves like 2017, that is not a sign of a currency or store value or medium of exchange. That's a speculative digital asset. You want to see, right now, let's see on my screen, I showed 180 day volatility around 67. Yeah, that makes sense in a very nascent market. Gold's 100-day volatility is $10.05. So that's where we need to go.
So if we get to a place where we break through this 10K resistance, what would be your thought process?
I don't know. I'm going to see how it does it. I really don't know. It's quite clear the bottom's in, and that's where I know when you say we want to talk, don't really know. I have to work on that one yet. Right now, I'm just pegging that as resistance. I'm going to take it a day at a time. And I think it's highly speculative. It should stay that thing. But as far as buying and looking for 10x kind of things, no, I don't suggest people do that.
Well, I hear you, and I just want to get you on record here because we're going to come back to you each and every month, and we're going to see how this thing matures because it has been a wild ride. Certainly, maybe bear euphoria even overwhelmed me at one point, but it's an interesting thing to see Bitcoin at this point being the highest performing asset. Maybe there are some small altcoins that have outperformed it, but Bitcoin right now is the highest performing asset of any sort of well traded asset class in 2019. And I don't think anybody really saw that coming in December. So that's been pretty interesting.
It's true, and that's why I'm scrolling down to my next screen, which is definitely true. It's been the best performer. But if you look at things like Tether and what's the other one, Binance Coin,
BNB,
in terms of market cap, Tether's really the winner. And I'm not pointing out, I remember people give me a hard time about this. I don't have a bias. I'm just pointing out in terms of actual market cap appreciation, what does Tether have going for it? It's the ideal, number one conduit between currencies, and it's stable. Unfortunately, it's pegged to the dollar, which is a problem. But I agree with you. And as far as speculative digital assets, Tether is not a special digital asset. It's actually what I would view as a cryptocurrency. Unfortunately, it's not. It's stuck. Pegged to the dollar, which kind of ruins that whole.
Well, I will throw in that somebody on Kraken pushed Tether up to $1,000 for a split second about 3 days ago. So I guess it's stuck in so much as you can stick anything. But yeah, you're going to catch a lot of flack for that, obviously, because Tether is just not an There's no upside. There's actually only counterparty risk. All that can happen with Tether is you kind of something could happen to the Tether network and you lose your money. There's no real world in which Tether actively trades for $3, $4, $5 unless there's just some crazy run, in which case they just print more. And so, I don't think there's a real danger of making money with Tether. There's only the chance to lose it. So you will catch a little flack because most people are in this industry to make some returns. And so, yes, the market cap's gone up because the demand for that stable coin has gone up. And yeah, I think that's part of the ecosystem maturing, is having stable assets while most of these assets are not stable. But yeah, I also think that you've made some interesting points, and I definitely just want to see what you have to say as if we nuke the 10K level like we did the 6,500 level, I think it's going to become potentially too parabolic, potentially unstable again, maybe too fast, too soon. But certainly something I want your opinion on as that happens, because I do think that there's quite a real possibility of us returning back to where we were.
Well, that's the key thing. What you said earlier on, just in this your last phrase, was most people are in this industry to make money. That I get. I mean, I'm a former speculative trader in trading pits. That makes sense. Yet they try to call these cryptocurrencies. They're not. They're speculative digital assets that people use to make money. And that's where I'm looking to migrate to, away from that. And unfortunately, that's what Tether's, I point out, is doing, is people aren't using it to make money.
Gotcha.
They're using it as a medium of exchange. I'm not trying to just point out the facts. So when you're out to make money, okay, you want markets to go up, and you need something to make it go up. And let's not just assume institutions are that stupid. They know those kind of things are somewhat considered Ponzi schemes. So that's what I'm trying to figure out. And so as a strategist, I know they're speculative digital assets. People are out to make money. Right now, it trends up. But that's where I need to get to the point where we're actually migrating to what you mentioned, we mentioned earlier, proper currencies, cryptocurrencies, and that they are not yet. Now, some are there.
Well, your point is well taken, that by the definition of a currency, they're not subscribing to the definition of a currency just yet. But obviously, I believe that over time, there is a strong argument that Bitcoin levels out at a certain price and becomes very stable.
Exactly, and maybe it's here. That's what I'm thinking. That's my point, is this year, I think we're there. That's why I'm not massively bullish. I think the market's doing that now, and that's why people should not, that's why you have to be careful. If it's doing that, it shouldn't go up to 100K in a heartbeat. It should hang around and potentially do, and I think it's already happening. I need to see my volatility level drop from 60 to 40. The last time we had a good low in the market in 2015, it dipped to 41%. That was the all-time low. So that's where we have we have maybe some disagreements, and that's where the market has a bit of a dichotomy. I'm trying to figure out. we're all trying to figure out.
Absolutely,
is it
absolutely.
cryptocurrency or just a speculative digital asset? And right now, they're still speculative digital assets, which is okay, but getting there, getting to cryptocurrencies, and that's why I point out to at least Bitcoin's more like gold.
Yes, certainly, and certainly right now, when compared to the U.S. dollar, it doesn't. It's not in that realm of stable currency. However, there's compared to maybe the Venezuelan peso, or I think it's the peso. Yeah, it might actually be a lot more stable. So as you start to play that game with more currencies, you start to see that over time, I think it will start to outclass more and more currencies, and then maybe in 10, 15, 20 years, we could see it start to really give a run towards our more leading currencies. But I agree with you. For the moment, it's hard to call Bitcoin a very functional currency when it can go up and down so much. That point is well taken.
All right.
You got anything else for us, Mike?
Oh, I think that's about it. It's a good discussion. I always appreciate touching base with you. I really want to do this because a lot of times it helps me form my thoughts and where to go next. And for now, we broke through 6,500. We should get to 10,000, but it's a day at a time for me. I look at it as a trader. Now it's no longer the perpetual perma-bear market, which is great. Look at it as a trader. Trade it. And that means trade the range and look for places to buy and places to sell, and maybe have obviously a certain amount that you hold long term.
Well, as always, I very much appreciate you coming on. I appreciate your time. You heard it here. Bitcoin has seen its highs, but nonetheless, its resistance of 10K. If we nuke it, we got to get Mike back on to help us understand the next phase. Thank you so much, as always, for taking your time out to do this. Mike McGlone, everyone. Thank you.
Thanks for having me.
Well, I sincerely hope you guys enjoyed that. I know I did. A big thank you over to Mike over at Bloomberg HQ. We always appreciate you stopping by. If you guys enjoyed this conversation, go ahead and leave a comment in the comment section below. And if you have any other questions for Mike, throw them in the comment section and we'll be sure to get them asked and answered on the next segment. If you're not already subscribed to FUD TV, I encourage you to hit that subscribe button and click that little bell notification. That way you're made aware whenever I put out new content. I'm Elio Trades. You're watching FUD TV. And I'll see you very soon on the next episode.